Howdy, just wait for both streams to kick in here, and then I can put my links in the chat. There we go, live on both the YouTubes and the Twitches. And 2 more links to go. That reminds me, where was Aubrey today? She on vacation this week or something? Don't know. Alrighty, Ramsey show over. Obviously, after show beginning. Make sure we got the right stuff on. Let's reload the page and see. Taking his time. What up, Sid? Hey, Sid, where's Obs? Is she on vacation or something this week? Did she say something about that? I didn't realize that she wasn't even in the chat all day. I don't think. Was she in the morning? Show 326, 7/25, 2022. Confirmed. And now, while Sid's answering that, we will listen for the drum taps and sing as we like to do here. Like all plans, it starts at step 1. $1,000 emergency fund. Step 2, you'll pay off all your debt. Except mortgage, we do not do that yet. So pay off your consumer debt. Every one of those charges, from smallest to largest. Baby step 3 is next. Full emergency fund of expenses. You stay gazelle intensive. His name is Dave Ramsey, and this is his plan. And I hope to meet him. I admire the man. I've messed up in my life, but these steps have made it right. That's why I go, that's why I go, and why I host this after show. If you don't like the way it's working out, you should do the baby steps. And if you want to have financial peace, then you should do Dave's baby steps. Now step 4 is when you can take a breath. Go, let's gazelle and invest. Step 5 is a safe for your kid. No student loans at all for no college. 6 is to pay off your home. Step 7, build your wealth and don't keep it all yourself. And you've lived like nobody else. Yeah. Now you get to live large, and now you get to give large. His name is Dave Ramsey, and this is his plan. And I hope to meet him. I admire the man. I've messed up in my life, but these steps have made it right. That's why I go, that's why I go, that's why I host this YouTube show. If you don't like the way it's working out, then you should do the baby steps. And if you want to have that financial peace, then you should do Dave's baby steps. Trumpet, take it home. Beep beep doo. Whoops doo. Live from Columbus, OH. It's the Ramsey Show Aftershow show brought to you by D.H. Schumann. Thank you so much, D.H. Here we talk about the Ramsey Show. The Ramsey Show YouTube chat and the people in it and all things financial and whatever else I want to talk about. You can do that when you have your own show. I'm your host, Coach Steve Money. I'm a certified Ramsey Solutions financial coach, and you can schedule a free consultation assessment with me at calendly.com/Coach Steve Money. Hey, you know, if you're having money problems or you just want to make sure you're on the right track, you can do that. Calendly.com/Coach Steve Money. The link's at the top of the chat and in the video description below and on the right side of my, I think right is this way though, on the reverse image of my YouTube banner. You can email me about anything, yes, anything, CoachSteveMoney@gmail.com. You can reach me on Instagram, add me on the gram, Coach Steve Money, no spaces. And if you'd like to donate to the channel so that I can make it better, that's paypal.me/Coach Steve Money. Alrighty, brand new show today. Let's check out the chat there. What up, Flash? Sid's on OT in the bayou. And so making all the money is Sid. New Ramsey show today, and in the big chair driving was Dave Ramsey, and his co-host today was scholarship expert Christina Ellis. All right, no songs for either of them, so that means we just do a market report. Alrighty. We have the most up, an up market today, despite NASDAQ being down 40.43%. The Russell Small Cap Index 0.6% up. Dow Jones Industrial Average, the total market index is 0.28%. S&P 500 0.13%. And as I said, the NASDAQ was negative today, and of course that means I probably got no shot at winning the fantasy mutual funds for today. Let's see, we got big earnings week. A lot of the big companies. Alphabet, which owns Google, is tomorrow at 12:30 p.m. Eastern Time. Microsoft tomorrow at 4 p.m., which is the market closing time. And then that's Tuesday, and then Wednesday is Meta, the artist formerly known as Facebook, at market close. And then Thursday, Apple at 5 p.m., Amazon at 5:30 p.m., and the AMD August 2nd. The most followed single stocks on the Google, and all negative, no positive at all. The most down, Meta Platforms, artist formerly known as Facebook, 1.55%. And the least down, that's going to be Alphabet, Alphabet, which owns Google, 0.36% down. Let's check the rest of the planet as far as markets are concerned. We got mostly up in Europe. We got completely down in Asia. Let's see how that US dollar doing. Euro up against the dollar, the US dollar. Japanese yen down to the US dollar. British pound low up against the US dollar. Canadian dollar up against the US dollar. Sorry. And the Australian dollar, mate, up against the US dollar. So once again, it's a clean sweep except for US dollar being up against Japan. Crypto, all negative. So that's not fun for the people that own that. Dave Ramsey does not recommend. Not a long enough track record on the crypto, among other reasons. Come on. Okay, it stopped. NASDAQ leads stocks lower. Bond markets move higher ahead of Fed meeting, and that is this week. Is that tomorrow, maybe? Oh, that's a video transcript of that. Does it have any other news? It does not, so we don't need the vid transcript for that. Just the basic thing. There you go. There's a nice little graph of the proceedings, and NASDAQ never got even. Tried to. Looks like about midday or so, but not. Crude oil down. Yeah, I get gas today for $4.05. And gold down as well. Let's check those futures and after hours trading. And that is, I refreshed it, so let's see, the Dow was up, but now it's down 0.15%. NASDAQ down 0.92%, almost a percent, and S&P 500 0.2% down. And of course, that could just change by tomorrow. We could have apertures depending on whatever the market does, whatever the traders do. Let's see what we got in news. Got from TheVerge.com. We got Blue Apron has realized that we really don't want to do any work, and that's true. No chopping or cleanup required. New ready-to-cook meals. Try and that would be try to TheVerge.com. I'm available for proofreading. It's try to make cooking even easier. You don't try and do something. You try to do something. Let's see. Some assembly required. Blue Apron's new ready-to-cook meals mean even less effort on your part. Yeah, so previously on Blue Apron, previously on Blue Apron, they would give you the materials and you would have to assemble them. Sometimes you would have to cut like carrots or whatever. You'd have to chop off the thing and cut them and so forth. But now they're just going to give it to you just like it would be like a frozen food thing or something from a deli that all you had to do is throw into the oven. So they're going to do that. Probably don't need to read the article to get the dealio on that. But yeah, they just, I'm sure people will be into that too because they don't have to do any work there. In the Bayou, Sid paid $3.53 on Saturday for gas. That was probably, though, at the Sam's Club, I'm guessing, or the Costco. I can't remember which one you have there, Sid. Or which one you go to, rather. Might have both of them. This from the Wall Street Journal, WSJ.com. Job switchers are earning a lot more than those who stay. Even if you're happy at your job, getting a new job for more pay is a good strategy as inflation eats into paychecks. So it's possible wherever you go to change jobs, they would be able to give you more money and willing to in order to get you. It often pays to switch jobs. Now is one of the best times to do it. Pay difference between those who stay and those who change jobs is growing according to the Federal Reserve Bank of Atlanta. Job stayers, or people who stayed in their job for the past 3 months, increased their wages by about 4.7% as of June 2022. Meanwhile, those who switched jobs received a raise of 6.4%, so not crazy, 1.7% higher, but 1.7% is better than 1.6%. So the gap is the largest in 2 decades for that. So, Since it is at a Walmart, no membership required. I've never seen Walmarts having gas stations before. The Sam's Clubs do. Walmart gas, never heard of it. We don't have that here. I'll have to ask my girlfriend if they have that in the Arkansas. Interesting. Yeah, we don't. I've never seen that before, ever. Like ever, Sid. See you, Zig. Thanks for enjoying the song. Appreciate it. Well, let's see. What do we got here from Yahoo Finance.com? Actually, finance.yahoo.com. And we got the same graphs right there and a video playing. And I'm going to do that. Why the stock market has defied the odds in July so far. Still got a good 6 days left of it, right? 31 days in July. Yes. Oh, but we only got we got 4 more trading days. 4 more Wall Street days of July. Let's see, investors have breathed a sigh of relief up to this point in July, as worst case scenarios for the economy have failed to materialize. NASDAQ Composite and S&P 500 are up an impressive 7.5 and 4.8%, respectively. Yeah, see, that's something we probably didn't notice, or like even realize that was happening. That's just for the month of July, though, starting with where it was at on July 1st. But it's up those amounts. NASDAQ being much more up than the S&P because the NASDAQ went down a lot more. So it was more on sale. So it would be more of a good buy. Shares of meme stock darlings, GameStop and AMC have jumped 70 and 14.5% respectively as traders embrace the risk on backdrop. Risk on, risk off. Even 2022 laggard Netflix has seen its stock rise 25% month to date, even after another lackluster earnings report on July 19. Interesting. All right, and so, well, they're going to say why. Pros point to several reasons for the summer rally. Odds of a deep recession eased last week as weak PMI data reinforced that. 1, growth is slowing. 2, pricing pressures are coming down. Explained a person. While prices are easing, the Fed can afford to be patient with data. That does not mean a policy pivot is coming this week, but it does mean there is little need for the FOMC to adjust their policy path higher either. Growth will continue to slow and the recession risk remain elevated, as evidenced by the further collapse in the 10-year 3-month curve over the past week. But a deep recession should not be a base case yet, and the case for a slowdown, mild recession has improved, and that would be better. Slowdown, mild recession, greater than sign, deep recession. That's your Reader's Digest version of that. Stock futures fall after Walmart cuts forecasts as inflation hit consumer spending. All right, I guess Walmart had their earnings report. 4 takeaways from the Investing Club's morning meeting on Monday. That's Jim Cramer, and we can't read that. I forgot to check this to see if it was part of this thing here. And, of course, he predicted that a couple of Wednesdays ago was going to be the low. And I think he was correct on that, because after that it was up for like 3 days and then it came down again, but it didn't go below what it was that particular Wednesday. So I think he's right. He's so far, right? Unless it would go below that level again. So we will see about that, Mr. Kramer. Hopefully he's right. Jerry. That's Kramer from Seinfeld. I know a person when I talk to it. This is arstechnica.com. Google fires Blake Lemoine, the engineer that claimed AI chatbot is a person. Google says Lemoine, or something like that. Violated security rules, slams wholly unfounded claims, and so he's got the Jedi robes on. No, that looks like just a hoodie. So they fired him after claiming the company's Lambda chatbot is sentient. Google said Lemoine, who worked in the company's responsible AI unit, violated data security policies. Right? You're not supposed. If employee shares concerns about our work, as Blake did, we reviewed them extensively. We found Blake's claims that Lambda is sentient to be wholly unfounded, and worked to clarify that with him for many months, and he wasn't having it, I guess. And so then I guess that's when he went public with it. This also from CNBC. Nearly 20% of Americans are afraid to check their credit card statements as interest rates approach an all-time high. As credit card debt swells and interest rates spike, many spenders are fearful about high balances. Nearly 1 in 5 Americans are afraid to check their credit card statements, according to a recent survey. With rampant inflation and rising interest rates, it's even more important to check your card statements regularly, said the chief credit analyst at LendingTree. Nearly 1 in 5 afraid to check credit card statements. Indeed, credit card balances jumped up $71 billion year over year, topping $841 billion during the first quarter of 2022. Federal Reserve Bank of New York reported. This week, Federal Reserve is expected to raise its benchmark rate by 0.75 of a percentage point, sending credit card interest rates higher. Average credit card interest rate was 17.46 as of July 20, according to creditcards.com. That is crazy. I mean, for somebody that hasn't had a credit card for many, many years, just thinking about that is crazy. So, I mean, even before, if you take away all the interest rates hikes, which have been, wasn't it, it was 1.25 for the first two combined, and then another one, so it's 2.25. So that's still over 15% average credit card interest rate, and that is crazy. What Americans are buying with credit cards, while soaring inflation has adjusted some summer trips, travel has returned to pre-COVID pandemic levels. The MasterCard Economics Institute found. They have an economics institute. Of course they do. And many Americans returning plastic to fund their trips. Vacations are the top credit card expense in 17 states, according to the Upgraded Points report. Other popular purchases were computers, Fernie, automotive expenses, and televisions. The survey revealed. That's probably pretty much normal, that those things are pretty high on the list. Especially if you get a new house or new apartment. Oh, I gotta have new furniture for that. It's critical to check your credit card statements. So why do they think that? So you can see what it is and pay it off? Let's see. If you're wrestling with high credit card balance, you can try calling your issuer to ask for a lower interest rate. It works more often than you'd imagine. All they can do is say no. And while you're on the phone with them, they'll probably try to, they'll say, oh, we'll even kick up your limit. With rampant inflation, rising interest rates, even more. I already read that one. And you may also qualify for a 0% interest balance transfer offer. And Dave Ramsey would say, don't do that. Just pay it off. Because that just makes you, doing that just makes you look like you did something. You still owe the same amount. You may save a little bit on interest, but you're not really doing anything. And so you can, it says these steps can make you feel a little more empowered. Just doing a 0% interest balance transfer, you're just moving it around. You still owe the same exact amount. All right. Boom, boom, boom. Sid says missing out on not having Walmart gas. Yeah, I didn't even know that they have that. Although, since Walmart's based in Arkansas, they may have it there. CNBC, the numbers show that the U.S. economy is at least teetering on a recession. Dave Ramsey called a recession. He called it, dude. Like 2 months ago now, I think he said. We're in one. He was talking to Rachel, and I think he said we're in one. With the second quarter gross domestic product data due out Thursday, so we'll find out definitely Thursday. If it's down again, then that's the definition of a recession, and that's all it means. A lot of people hear recession and they think, oh no, what does that mean? That just means that the 2 quarters in a row, the gross domestic product is down. The economy stands at least a fair chance of hitting the rule of thumb recession definition of 2 consecutive quarters with negative GDP reading. Should inflation stay at high levels, that then will trigger the biggest recession catalyst of all, namely Federal Reserve interest rate hikes. Treasury Secretary Janet Yellen said, we just don't have conditions consistent with a recession. Well, the rule of thumb recession definition, we do. So she may personally have a different definition, or they may be using a different one at the Treasury Department. White House is sure the economy is not in recession nor headed for one. Wall Street is pretty sure there's no recession now, but isn't as positive about what's ahead. Looking at the data, the picture is indeed nuanced. We'll find out Thursday. There's no need to freak out, but don't be surprised if we actually are in one by that definition. And she says, here's what she says, a recession is a broad-based contraction that affects many sectors of the economy. We just don't have that. Right, so that's a different definition. Alrighty, well, let's go to reddit.com/r/Dave Ramsey and sort by new and see what's going on here. What's an ideal down payment? 10%. Dave recommends 10% if you're a first-time home buyer, and you will have to pay private mortgage insurance for that if you do not have 20% down. And that would mean that what PMI means, that's what I meant to say. PMI, private mortgage insurance, and that is insurance for the lender. That's not insurance for you. That's insurance for the lender if you don't pay your mortgage payment. So let's see. So far, my wife and I have $59,000 on mutual funds. It would be in mutual funds, actually. You have an amount invested in a certain stock or funds or whatever asset you have. So, but you don't have $59,000 on mutual funds. But whatever. We moved to a cheaper state as homes in our old state were average of $1 million. Maybe that was the California. I'm feeling discouraged because it looks like it'll take 5 years just to save $200K and get into a $375K house and have small payments. I'm wondering what your experience has been following Dave's principles for home buying. What was your down payment, your house price, and your monthly payment? Okay. Well, you don't need that much. $375. If it's your first house, $37.5K. If it's not your first house, you'd be looking at 37.5 and 65. No, 37.5 and 37.5. $75,000. Yeah. So that'd be $75,000 would be a 20%. So, I mean, if you put, the more you put on it though, and he's fine with that, putting as much down payment down as you can, because that does indeed lower your payment, and it also lets you get around the buying too much house because you already have that money, and then paying on it, you'd already have the equity, etc., etc. So that lets you get around his house buying thing and lets you buy too much house. But if you save $2,000 for $200,000 first, then it's not too much house for you. So, because you made the sacrifice by saving up that already instead of having to do it later by not being able to continue on the baby steps as quickly. Girlfriend has spending issues. Come on. Taking this time to load. There we go. There we go. All right. Wipe out debt before marriage. A lot of couples do that before they get married. If one has debt, they do that. But let's see, it's not necessary. It's just when you get married, it's our debt, even if you didn't personally have any before you got married. Hello all, long-time lurker, first-time poster on here, and hopeful for assistance. I posted in the personal finance subreddit. However, my family suggested to get advice from this group as well. Family might be smart. I intend to propose to my long-term girlfriend later this summer. However, we do not see eye to eye on personal finance. Well, then maybe you don't propose to her. Maybe you break up with her because of that, if that's a deal breaker. When this does happen, you got to be able to compromise with each other. And if you're not going to change, if she's not going to change at all, then don't propose. In short, busted my behind the past 4 years to pay off car loans, student loans, and credit card debt. I now only have one debt, mortgage, and I'm saving nearly $2,500 a month into my retirement and investments. Should now have any other investments while you're still paying on your mortgage, if you want to follow this plan as your family is suggesting. Girlfriend has $93K currently in consumer debt. That's a lot. I wonder what she makes. Gee, that's a lot for a single person to have. With $75K of it on credit cards and the rest on her Acura. I was not aware of the exact numbers until a few weekends ago, when we were at a wedding of a family member and her credit card was declined at the airport. Later tonight, we had a long talk, and she shared her current outgo in detail. She does well in her career, makes $120K per year gross, and she has almost that much in debt. However, I'm worried that if the recession gets worse, that doesn't matter. Stop watching the news. That doesn't matter at all. Her profession is one prone for layoffs. Oh, okay. Well, that could happen anyway, regardless of the R word here, the recession. And all of that debt would be like a 500-pound weight on her, parentheses, my back. Am I wrong for having serious second thoughts about thoughts, not doubts? Because I was thinking doubts at the same time as thoughts. Second thoughts about moving forward with her at this point. Should I suggest she close her credit cards as she admits she has a spending issue? Yes, you should. I mean, as far as this particular subreddit and Dave Ramsey's particular advice, you're not doing it right either. You're basically doing debt leverage by, instead of paying your mortgage off, you are having additional investments in addition to retirement. So it should be 15% of your gross income into retirement. And then beyond that, I'm assuming no children. So you can skip step 5, and step 6 is pay off that house as fast as you can. So, but anyway, so yeah, you got to this whole thing about where is it? I busted my behind the past 4 years to pay off my car loans, student loans, and credit card debt, and she didn't do anything. And so that, my friend, could be what the heck is that word? Resentment. You could have resentment. And so that's not good to start out a marriage with, or even an engagement with. So that's going to be up to you. As far as just for this poster right here, Chile Gonzalez 11, I would recommend you look more into the baby steps and follow those correctly for yourself. But yeah, I mean, you got to do something about that. Should you suggest? You can suggest anything you want. She's your girlfriend, after all, so you ought to be able to talk about anything with your girlfriend. So, and definitely somebody that you're thinking about having as a fiance. So many couples, like, they try to get around the other person. They try to save, quote unquote, save the other person from having to deal with stuff. That's not how relationships work. You need to have the commitment. You need to have the you got to talk about stuff. What is that? Conversations, communication. I am losing my mind today, man. All right, let's see what else we got. Mutual funds. Inflation objective 45. That sounds cool. Mutual funds. Could you all post some of the funds that you're invested in with for growth and income, growth, aggressive growth, and international ETFs mutual funds? For international, I'm currently in VXUS. For growth, I'm in VOO. And these are Vanguard. They start with a V there, so they're Vanguard funds. Yeah, we'll see if people have posted any. I'm interested in that. But these are, sometimes people have trouble with what these are. These categories are not in order because I can't remember which ones ever, but it's small, mid, large cap, and international. So, but yeah, people generally, like in the Ramsey show chat, there's some just types of certain people where they love to type in what index funds they're in. Let's see. Target date funds. Don't do target date. No target date at all. Per Dave Ramsey. Need more info. Is a 401k. First, don't take Dave's investing advice. That's false. Take it. Take it. Definitely don't use. So you got that. Let's see. Taxable brokerage. What? What about, does this not include, does it have something else for retirement maybe? Yeah, so nobody is, yeah, so this is all just index funds. Yeah, this is all just index funds, etc., etc. Alrighty, so people are putting in their index funds, and a lot of them are the same Vanguard stuff. Let's see. There's a guy from the chat. 93K. Yeah, I don't know. Sid gets so much cringes from the hide my Amazon packages from my husband post, right? Whoever hides their Amazon packages from their husband, Sid, would be the A. And that guy is running into that relationship, right? You're right, Sid. Requesting advice on the HSA, that's Health Savings Account by Soho Nights. Soho, got it. Baby step 4, Flair. Hi, I have a high deductible health insurance plan, and I've been considering opening up a HSA account for stuff like dental appointments, massages, acupuncture, etc. Fidelity looks like a decent option. especially compared with Bank of America. Does anyone here use Fidelity? I don't have a HSA with them, but I do use them. Are there any hidden concerns or charges? I wouldn't think so for HSA. Another option is Schwab, more or less the same, probably. HSA, debit card only. Who decides what's a HSA eligible expense? That's a good question. I don't know that either. Let's see if they answer. Whatever your employer will allow you to open. I don't think you have to do that through an employer. I mean, do this if you're a point when you want to invest inside of your HSA, and that's at least baby step 4, which the person is on, maybe baby step 7. We chose to open up a HSA at Lively because they had the best choices as far as options. Even with Fidelity, you're limited about 25 pre-chosen funds. I did not know that. At Lively, you can invest in anything TD Ameritrade has to offer. Okay, that's a long answer. Yep. Okay. Yeah, definitely. If you're gonna meet that deductible, if you definitely meet that deductible every year, then yeah, you got no issues with the HSA. Boom, 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 boom. And there you go. 1 month in, phrasing, 1 loan paid off. Sure, it's fine, I guess, is the username here. Baby step 2 Flair. I graduated this spring and started my career a month ago. Now I'm settled in my new apartment. Done juggling, switching cell phone providers and health insurance companies and paying for initial licensing and what feels like a million other things. I'm finally at a place where I can start throwing money at my debt. I had enough to pay off the entire loan for my first year of professional school, so now it's gone. Excellent. $12,749 down, $99,759. Hopefully, graduated, so done. So yeah, I was gonna say you would not pay off a previous loan, a previous student loan. You would just pay minimums if you still had college to go, because you wouldn't want to pay off one loan and then take out new debt. You wanna cash flow the remainder of school and then start paying off debt later. So just minimums on them. So yeah, so that's good. He start on his way home, sweet home. So hopefully that number will jump up as to what they can continue to put towards debt. So that's one month in and 1 loan paid off. So excellent. Oh yeah, so that's not a yeah. I was, for some reason, when I was looking at it first, I thought that was for the year. The loan for the first year of professional school is that amount, but the person paid that off in 1 month. So cool. Genuine Bob, over 35K in debt. Any advice appreciated? Paid off. Hey folks, I'm seeking advice on the next steps I should take to lower my debt. I have the following: 29K student loan, from the same company, credit card 1, 1920, checking 156.91. You know what would be great here, probably, and I'm just spitballing. I am just wondering if you should do this. Ramsey baby steps. I wonder if you should do that. Baby steps. Baby step 1, save $1,000 for starter emergency fund. Baby step 2, pay off all debt except the house using debt snowball. Baby step 3, save 36 months of expenses in a fully funded emergency fund. Baby step 4, invest 15% of your gross household income in retirement. Baby step 5, save for children's college fund. Baby step 6, pay your home off early. Baby step 7, build wealth and give. So I would apply that to your life. I would read this. I would learn it, know it, live it, is what I would suggest. But let's read the rest of the debt. How many? 8 credit cards. 8 credit cards. All right. So let's see, 1,500 and change, 2,090, 3,314, 4625, 2146, 1842. As is the case with most people, I'm sure I would love nothing more than to throw money at all of these loans. Well, that's not how you do it. You pay them smallest to largest, so you reorder them. I don't know what kind of order you have here, but you reorder them smallest to largest. So this would be that 1234 one. That would be the one to go first. The 29K student loan would be last in this order, unless you have a more expensive car or whatever. Would love all of the. My issue is I live with my significant other and I'm the only source of income we have. We have a few pets, small ones. She is trying to get on disability. This process can take minimum a year. Yep. Full-time job and do delivery jobs on the side. In addition to take a survey, get 10 cents task. I'm in the process of looking for a higher paying job. We pawned absolutely everything we can. I can't ask friends, family for this kind of money. Nope. Nor should you. So bottom line, I don't have enough money coming in after I pay on basic living needs to afford to throw any money at these loans. If there's any work that she can do with her disability, I would say she needs to get on that. And for that matter, are some of these credit cards hers? CDC National Immunity something. National Immune something or another. Wonder if that's legit, yo. Trying to get on disability. Blah, blah, blah. So see if there's anything she can do at all to make money. Because obviously you're paying for her food, etc., her shelter, etc., probably everything. Don't have enough money coming in after I pay on basic living needs to afford to throw any money at these loans. All right, I'm stuck. I was gonna say maybe I should get one big loan with a crazy interest rate since my credit is poor now. Nope. But then typing this out, I realized how many MFCCs I have. That's a good adjective there. Also listened to Ramsey's book and realized all the mistakes I made along the way. Yep, we've all done them, dog. Is using not to this level that you have. Is using the snowball method the best idea right now? Yes, it is. And you work absolutely as much as you can and keep selling stuff that you're not using regularly. And cut expenses. Go down to just one subscription service, or even live without that one. So, but yeah, yep, baby steps. Snowball method. $1,000 emergency fund first, and you don't put anything on these credit cards again, ever. You decide you're not gonna do debt ever again, except for a home mortgage. All right, let's see. Being Jackaroo 2 days ago. Pay a little on primary home and rental property, or focus on one. Let's see. Keep finances between my life, which includes mortgage on primary home, my rental property separate. Doesn't matter. They're both you. You owe both of them, regardless if it's a business debt or not. I was paying a little extra premium on both mortgages, but after learning about the Ramsey plan, I'm debating whether to throw it all with a single mortgage. Selling the rental does mean I could pay off the other mortgage, but I'm not in a dire situation where that is necessary. It depends on if you're making any money on the rental property. If you're making $200 a month, that's not worth it. That's $2,400 a year. You could work extra. You could work an extra job for somebody else and make $2,400 a year. So that's just event. So for your rent, you'd have your mortgage on that rental property. You'd have to the renters would have to be paying your entire mortgage for that, and then plus some. And then if anything breaks, you're at a negative. So don't know that you want to do it like that. Dave recommends you buy a rental property completely in cash, and then that way you don't have that problem. But yeah, that's too much risk as far as things that could go wrong. They might not pay, etc., etc. So probably since it's one. Just one rental property, I would probably get out of the rental business and do that. Like I said, unless it's making way more, or you're close to paying it off. If you're close to paying it off, maybe pay off the rental first, and then that frees up more money to go to your house, or vice versa. But if you keep it, you should sacrifice in some other areas so you can throw more money to those mortgages. And yeah, one at a time instead of a little bit extra on both. You can get one paid off first. Beep, 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 and pom, pom. Debt-free but need advice. All right, interesting. Throwaway for work. Really need help figuring out how much we should put towards a house. You do 20%. Best case scenario, if it's your first house, you can do 10%, but you have to pay PMI. Let's see, stable job and fields that are recession proof, make around 210 this year and 240K next year combined. Oh, I see. Okay. And we have been aggressively saving for a house the past 3 years and have around 160K in a high yield savings account with amazing 1% interest rate. Cool. I contribute the max to my 401K, and my spouse does about 12K annually. In total, about 2280 combined. Employers match 5%. You can back off on the contributions while you continue to save up for a down payment. But we don't have any other debt other than $500 a month for a car payment. Doot. Doesn't matter if it's 0% or not. Doot. Maybe you sell the car. Dave is going to go ahead and say to pay that off first before you buy a house. Let's see, monthly expenses about 3 or 4K. That's not bad. Making over 200K and your monthly expenses are that. They probably don't include rent or what the mortgage will be in their monthly expenses, which you should for this exercise here. My last job moved us around quite a bit, so I took a new job for COVID. Are you sure that you're going to be in the same area long enough? Plan was, and moved us in with my parents, okay? Plan was to stay with them for 6 to 12 months, but while we found a house, we've been so lucky to be able to stay with them, don't pay any rent, but we help out with groceries and taking care of the house. We put in dozens of offers over the last 2 years on homes, but refused to waive contingencies, which would basically require to have your offer accepted in our area, New York, New Jersey border. It's very much long overdue for us to move out and find a house, right? Okay, the market is changing rapidly near us, and house sales have hit somewhat of a standstill. Okay, you can just wait for it to go down. We want to keep our monthly mortgage payment under $3,500. Okay, we'll do that then. Let's see, $3,500. Yeah, you're gonna be okay with that. That's gonna fit under Dave's 25% of net income max, so you're not house poor, so that should work. Tax on area around 12K. Focused on houses in the 450 to 550K range. So you are gonna, you're gonna need whatever mortgage payment you need to get to stay at 3,500 until market corrects. Our view of a correction is 10 or 15% from 2019 numbers. Hey, guess what? Guess what? Guess what? Not gonna happen. Until the market corrects, our view of a correction is 10 to 15%, minus 10 or minus 15%. So 10 or 15% minus the from the 2019 numbers. So lower than that. That's not happening. The houses in this price range need a lot of work or are turnkey and still go for 100K over asking. Can we expand our budget? Are we on the right track? We both didn't have financially stable upbringing, so we're overly cautious with finances and don't want to screw up. All right. Well, not paying the car off is screwing up. We'll do that first. Dave would recommend that first before you buy a house. Beyond that, you are going to need a bunch of... say you don't do that and you keep the dumb car payment and you have 160, that's not gonna do it, because let's see, even for 450K and minus 160K, that is going to be 310, 290. Yeah, 290. So 290,000, and it just depends on what range for the actual mortgage in order to get your house price to that. So whatever that math is. Oh, the thread has been locked by moderators of Dave Ramsey. I wonder if people started being uncivilized. 50 comments. Success Saturday, 9 comments. Cool. We already did this one. Financial Peace University is worth it because you do learn a bunch of stuff, and especially if you're going to do an in-person class, if you're more motivated by having camaraderie and people to /compete with, kind of that thing, and motivate each other, etc., then definitely worth it. Alrighty, upcoming streams. This one, Monday through Friday, 6 p.m. Eastern Time, the Ramsey Show Aftershow show, and I go live normally, even if the Ramsey Show is a repeat, which there aren't many anymore, since we do have all the extra guest hosts, even when Dave takes a Friday off, etc. We'll probably do tech support with Coach Steve Money at some point this week. It may stretch into the weekend before that happens, but that, and maybe one or two live streams. I did not do a gaming stream of Uncharted during the week, so I still have, during the weekend, so I still have one or two streams of Uncharted to go before I finish that Uncharted 4, A Thief's End, before I finish that one. Alrighty, my links are at the top of the chat, the video description below, right side of my YouTube banner here, and I'm once again Coach Steve Money. I'm a Ramsey Solutions certified financial coach. That's Dave Ramsey's company. And you can schedule a free consultation with me by clicking the link. That'll take you to calendly.com/CoachSteveMoney. You click on financial coaching and you click on the date. Let's do August 14th. That's my birthday. And you click on the time you would like. And you let me know. Actually, Calendly will let me know when you would want that appointment, and I will email you and let you know what information I need in order to accurately financially assess you. PayPal is for donations. That is paypal.me/CoachSteveMoney. You can donate just like D.H. Schumann did. Thank you so much, D.H. Instagram is Coach Steve Money, no spaces, and you can get in touch with me for any reason. You can ask me or talk to me about anything. CoachSteveMoney@gmail.com, and you can ask me about the Ramsey Show, Aftershow, how I do the after show, anything about the Ramsey Show, anything about Dave's financial advice, anything about coaching, anything about the scheduling of appointments, how that works, if you have any questions. Oak Island, video gaming, I love video games, computers, and 25 plus years in the computer industry. I love the computer business, and if you'd like to sing the Baby Step song or one of my other songs here, then you can certainly do that, and I would love to play that on here if you record it, or you can do it live. We have the technology to do that. Ready. Make smart decisions, smart financial decisions, and any other decisions, why not?